Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Airbnb just reported earnings, and this is one of the most interesting companies in the market, very disruptive to hotels and travel, but it's a tech stock, so there's a lot of growth potential here. So I wanted to dig into what this company is, why you might be interested in it as an investor, and whether it or not it's a good buy and hold long term. To do that, I asked Jon Quast from Working Capital JQ, where you can find him on YouTube, to join me. How are you doing today, Jon?
Hey, Travis. Very good, and very excited to talk about Airbnb. This is actually one of my favorite companies.
Yeah, I absolutely love the company. We'll talk a lot about the business model here and see where they're going in the future. Before we get there, please remember to subscribe to Riiv Investing. I really appreciate the support, and send this to anybody you think would be interesting, because hopefully it will be a valuable deep dive into Airbnb. Let's start, Jon, with what they do as a business. Airbnb is really a two-sided market in the travel business, connecting hosts to travelers. So the best comparison that a lot of people have been making for about a decade now is that they're like a hotel company, except the hotel can be an extra room in somebody's house. It can be a lake cabin. It can be basically any kind of place. It doesn't have to be constrained to a hotel. So they kind of sit in the middle there. They don't own the properties. They're just the technology between the two. And then they take a piece of the pie when a place is rented out. So the success of their hosts is really going to be important to them, drive long-term value. And then, of course, they want customers to keep coming back. What they answered early on, I think, this kind of goes back to the founding of the company, is building that layer of trust, right? Like going to somebody's house and staying in a spare bedroom, or, I've stayed in like one of those little rooms off of a garage. That's a concept that was not common 10 or 15 years ago. And they really normalized that. So I think that's a really interesting way to think about the business, and where they are today is where they started, how disruptive that was, and how they built that layer of trust. But anything you wanted to add there, Jon, before we get into how they make money?
Well, it's not just the layer of trust, although that is a very important aspect of this business. It's also just the mind share that they occupy. So when somebody, it's become a verb. And it's really something that I believe it's over 90% of the traffic that they get from people who are traveling is unaided, which means that they don't need to be shown an ad. They don't need to be told about this. They already are very aware of Airbnb, and they are going to it when they are seeking to travel in this way. And that is something that is hard to get. It's important to keep. And Airbnb has it.
Yeah, and there's companies that have tried to copy some of the things that they're doing. I mean, Booking.com and all of their subsidiaries have tried to enter this market, but when you have a hotel listing sitting next to, a spare house or something like that, like a lake cabin, I don't know, it just doesn't quite work as well. It seems like is the way that the market is playing out. And the same thing with competitors that are a little bit more direct, like Vrbo, where they just kind of copied exactly what Airbnb is doing. But what's sticky about Airbnb's business is that it's a two-sided market. So there's a network effect that's going on. The more buyers there are, the more sellers there are, which attracts more buyers, which attracts more sellers. Yes, you can list yourself on both of these platforms, but if one is going really well and the other one's a really small piece of the business, it's just not worth your time to spend time on something like Vrbo. That's kind of the way the market has played out, and is something that is a common theme and a common strategy across technology. So yeah, you're right. I think the fact that it has become a verb and has built this business the way that it has, that's what's going to ultimately be really difficult to disrupt, at least in its niche of the market. And we'll kind of talk about this as a niche business going forward. I want to start with how Airbnb makes money. Jon, do you want to go through that? Because when you go and spend money on Airbnb, you spend $200, let's say, they're not recognizing $200 in revenue. What are they recognizing?
That's absolutely right, Travis. They are not recognizing that full booking value as their revenue, because that is not their property. That is not their house. They are not the ones renting it out. It's a person like you or me who owns that house, who is putting it up on Airbnb and is listing it. Therefore, those hosts are the ones recognizing the majority of that booking as their revenue. But they are not recognizing all of it, because Airbnb is taking their cut. They are taking what is known as a take rate for the luxury of listing it on Airbnb. So if you want to make sure that that property is booked, you are putting it on Airbnb. Like I said, 90% of the traffic going to Airbnb's website is unaided. So that is where people are going. You want to book your property, you have to put it on Airbnb. But if you put it on Airbnb, you have to pay the piper. You are going to pay Airbnb that cut of your potential revenue, the booking. So there is a big difference. We talked about this before the show, a big difference between the booking value and the difference between Airbnb's revenue.
And to put numbers behind that, in 2022, there was $63.2 billion in gross booking value for Airbnb, 394 million nights experiences and experiences booked. Revenue was $8.4 billion. So $8.4 billion in revenue out of $63 billion in gross bookings. I think one of the things that we need to think about there is that a way that they can grow is increasing that take rate, but you also want your hosts to be successful. I always think back to Microsoft is one of the companies that talked about this early on in PCs. They were building a platform, right? And they wanted to be a very big and profitable company, but you don't want to take 80% of the value of that platform because you want to have developers building on it. So you want to have games built for your PC platform. You want to have office productivity tools built for your PC platform. The same thing's going on with Airbnb. If I go buy a lake home and I say, hey, I'm going to use this maybe, 6 or 8 weeks out of the year, but the rest of the time I want to put it on Airbnb, they want to make that worth my while. And so they don't want to squeeze me out of the market so that I eventually go, man, this isn't even worth the headache of having the Airbnb. So that's kind of the balance there with their pricing and take rate is, and they talked about this on the conference call. They haven't really changed the take rate much since they started because they want to have those hosts be successful. So that's always going to be kind of a challenge for technology companies like that. But that's why you'll hear about that on conference calls is the take rate, and think and look back at the numbers and look at, what is their revenue compared to what their gross booking volume is. You can really tell the health of the business based on that gross booking value number. So that's ultimately what you want to see. And that was up 20% year over year. Revenue is up 24%. So those are really healthy numbers and kind of in line with each other as well.
So along with what you're saying about the take rate, take something like Fiverr, for example. This is also a two-sided marketplace for freelance work. And Fiverr's take rate is one of the highest I have seen out there, and it just surpassed 30%. And one of the things about that is that it has been able to grow that take rate by putting on value-added services for its sellers, its freelance workers who are putting their stuff out there. And one of the things that, for example, and Etsy has done this as well, grown its take rate through sponsored or advertise. You promote your listing. And so if you want to rank higher within the marketplace, you can promote it and potentially earn more revenue from your stuff that way. That would be a dangerous path, I believe, for Airbnb to go, because that would boost your highest revenue host and potentially push down all of the other hosts who are barely scraping by, who can't afford to promote. And you would potentially lose them because there's a very high cost of holding a property that you're listing on Airbnb. That comes with a high expense, as opposed to something like an Etsy shop or even promoting your own work on Fiverr. There's really not a incremental cost of holding that listing up there, as opposed to Airbnb, where perhaps you have a mortgage payment and you're putting the entire property up for listing on Airbnb. You have to have that booked a certain nights a month just to break even. So I don't know if the promoted listings would be the way for Airbnb to increase that take rate. They have to be very careful on this. The other thing that you talked about here is that it's very important for supply and demand to be in balance,
right?
Because yes, you can increase the amount of listings, but that's a third party. It really needs to be treated as a business. So they do need to be making money. And if there are too many properties out there on Airbnb and not enough people booking, there's a potential for a lot of people to not be making money. One of the ways that I measure the health of this is with average daily rates. And so this is the amount that somebody is spending on average to stay in an Airbnb. If there is more demand than supply, average daily rates logically go up. If there is more supply than demand, then average daily rates logically go down because these prices are adjustable on a real-time basis. In the most recent quarter for Airbnb, basically flat. So down 1% or up 5%, depending on how we are looking at foreign exchange playing in there. But either way, it's not a significant move either way. It's essentially flat, but listings were at an all-time high. So I really like that it seems that supply is matching the demand right now for Airbnb.
I want to give a couple examples of exactly the dynamics that you're talking about. So on the advertising side of things, we've seen a number of companies basically build a core business and then say, hey, if we add this advertising, we can basically monetize the discovery piece of our business. So Amazon is a perfect example of this. If you search for something on Amazon on your phone, on their app, the first thing that's going to pop up is a sponsored link. So that seller, which is likely a third-party seller selling on Amazon, is then also paying Amazon to be the first link that pops up. So basically, Amazon is increasing its take rate by having advertising in there. Another example is Spotify. This is maybe a little bit more in the background, but on the Spotify playlists, labels and artists will pay Spotify to basically be on that list so that when you're just listening to music that someone else curated, it just so happens that, record label X paid to be on that curated playlist. So that's a couple of ways that these technology companies have started to do exactly that, to monetize the discovery piece. But I do think you're right that that's kind of a fraught side of things for Airbnb, because then do you push out a whole bunch of supply that is maybe a really valuable piece of the business, and it kind of muddies the waters. On the supply side, I think the analogy that I was thinking about as you were talking was Uber. Uber has increased their take rate and basically made it less profitable to be a driver. And I've noticed this incrementally, that it's just a little harder to get an Uber where I live. Now price fluctuates, so maybe that's what they're thinking, is that prices will go up and that will attract more drivers to the market. But it's a delicate balance there. You want to have more supply, but you don't want to have too much supply, because you do want to have, in the case of Uber, your drivers be profitable. In the case of Airbnb, you do want those hosts to be profitable and have it be worth their time. So again, a balance. It sort of puts a cap on what their take rate can be. So when you think about their growth, the two ways that they can grow is just more people traveling and using Airbnb. That's exactly what we've seen over the last 2 years specifically. We talked about the 20% increase in gross booking volumes, but they don't have a lot of ability to increase that take rate, or you start to deteriorate the business. And so that's kind of a balance I think we should think about. The other thing that sort of puts a cap on the growth rate is, at what point do you start doing what hotels are already doing? They talked on the conference call about working with a lot of landlords of basically apartment buildings, multi-family buildings. And that's really interesting. But now you're starting to really move into the hotel market, where you're going into a big building where you can open a door and have a little apartment to yourself. Well, that's a hotel room. So, I think that's an interesting kind of yin and yang for them as far as pushing into more areas. But maybe it's good, maybe it's not, but something worth thinking about. One of the things that Airbnb has done really well over the last 3 years, and this goes back to the start of the pandemic. Remember when the pandemic hit, Airbnb, I think, laid off 20% of their employees. Maybe it was even more than that. They had to raise money just to stay afloat. They were basically paying their hosts for spaces that were booked that they weren't going to then get paid for. So there was a lot of turmoil around this business. They didn't know if they were going to be able to survive in those early days of the pandemic. So they cut back their workforce. They did a lot of the things that tech companies are doing today, but they did it 3 years ago. And the interesting outcome for Airbnb that we're really starting to see hit is operating leverage starting to be a big piece of the story. And this is something that I bring up because all technology companies should have a lot of operating leverage. You build out your technology business, you pay developers up front, you pay salespeople up front, and then eventually you should hit a point where if revenue grows 10%, net income should grow 20 or 30%. We're starting to see that with Airbnb. I'm going to just cover the last 3 fourth quarter net income numbers. Q4 2019, which was actually pre-pandemic, lost $352 million. Q4 2021, so starting to recover from the pandemic, made $55 million profit in the fourth quarter. And this most recent fourth quarter, $319 million in net income. The same story goes for adjusted EBITDA, which is a proxy for cash flow of a company like this. Operating income, it's the same across the board. What's happening is that they're growing the business, but they're not growing headcount and expenses nearly as quickly. So that's one thing that I really like to see with Airbnb, and I would like to see across technology. What were your thoughts there on the operating leverage we're seeing?
Well, I mean, forget not growing as fast as other tech companies. It's actually down. So from 2019 to 2022, their employee count is down 5%. Their revenue is up 75%. And that is one of the huge things that's propelling this 23% net income margin on a GAAP basis, generally accepted accounting principles. If you're a fan of Charlie Munger, anything other than GAAP, he calls bullcrap earnings. Okay, this is the real McCoy here for Airbnb, 23% margin. And you're right. This is a technology company. You can handle more revenue. You can process more from the technology that you have built. That is inherently efficient. And I really admire Airbnb for maintaining discipline in unlocking these huge profits. I think that there's a temptation among Silicon Valley companies to just grow your head count for the sake of growing your head count. Compare yourself to the other companies and just kind of pound your chest a little bit when you go to cocktail parties. They've maintained this discipline. They've grown, and they are unlocking incredible profitability. And if you want to use the bullcrap earnings, to borrow Munger's phrase, I believe it's close to a 46% adjusted EBITDA margin. Yeah. That's mind-blowing. Mm-hmm. Now, what this is doing is it's unlocking a massive amount of cash. They're going to have to start figuring out what to do with all this money.
Well, they're starting to buy back shares. I think it was over $1 billion last quarter that they bought back.
But right now they have $9.6 billion in cash equivalents, and marketable securities. That doesn't even count the almost $5 billion that they have in customer deposits. So when there are bookings, right, there is a transaction that happens. It's not recognized as revenue right then. Airbnb doesn't recognize it until it is actually check-in day. But they have almost $5 billion of customer deposits just sitting there. You know what that's doing? It's accruing interest for this company. We've talked about these cash-rich companies that are actually now turning the higher interest rate environment into a tailwind. This company generated over $100 million in interest income in the fourth quarter alone, and they generated $186 million for the entire year, just in interest income. I think that is just an incredible thought of, wow, this company has a lot of money.
Yeah, I totally agree. Another hidden value is the customer deposits that are sitting there, and Airbnb is making money on that because interest rates are rising. So another tailwind for them. I want to talk a little bit about not growing too much for Airbnb and getting into too many markets. This is a company that can be worldwide, though, without building new hotels everywhere, which is one of the advantages. So $63.2 billion in gross booking value in the last year. I'm just looking at the market size for global hotels and resorts seems to be about $1.2 trillion. So they have less than 1% market share as far as resorts and hotels go. As we'll get to the valuation of this company in a little bit. This is where I start having questions: is how big can a company like Airbnb get? Because I think we've seen a lot of use cases over the last couple of years where Airbnb is not for everything. There is a lot of fees that go into somebody coming in and cleaning up after you. You do have to maybe clean up after yourself a little bit more than you would at a hotel. And it's not great or even cost effective for like a one-night stay. So I think this is one of these businesses where I absolutely love the business. I love the operating leverage. I love them allowing other people to do the development and innovation for them, build these Airbnb specific experiences. But it is a niche business. And I think that investors and executives there need to lean into that. That's the whole point, that it's not a hotel, but it does cap the market opportunity. So how do you think about that? This is, as we start to think about the valuation, I think of this as a company that, maybe it could double revenue. Maybe it could double revenue again after that. But do we get to a certain point where I don't want Airbnb being a hotel and booking.com? So how do you think about that? Because I think that niche angle is something that we need to think about with a lot of these companies, that dominating your niche, great, but growing too much is probably not.
So I love Airbnb as a user. I plan to be an Airbnb host, let's say within the next 4 years. And I also really love this company as an investment because I really see it as having a durable competitive advantage with its name brand. I know that people don't like to talk about name brand as a moat. I would put name brand in the moat category in certain cases. And in Airbnb's case, I do. And highly profitable, so I like that. But I am 100% with you on this. And one of the things that has held me back from perhaps investing more aggressively into this company is I do wonder about how big can this be? Is it already at scale? I think it's a valid question when you look at its size already. And yeah, can it double its net income again from here? Boy, that's going to be a tall order at this size. One of the things that they did talk about in the letter to shareholders to end 2022 and in the conference call, but they did not develop, was that they are going to explore incremental revenue opportunities, perhaps even outside of their core niche. And what on earth does that look like? I have no idea what Airbnb might be planning there. I do know that they did say from a profit and loss perspective, they're not planning on this being like Google's other bets, for example, where they're just plowing billions and billions of dollars into these other bets. They don't have
that much excess cash. Yeah.
Right. Exactly. But they also don't plan on it being something that it's just going to be a money pit. They're going to continue to make a lot of profits, and they're going to continue to invest in the core business primarily. One of the things that they brought up was, hey, we started this entire operation we bootstrapped it. It was an air mattress in our living room. That's how we got our start. That's how we envision developing new revenue streams, is that bootstrap mentality. So that is reassuring in that aspect. But the fact that they're even talking about that does hint at the fact that perhaps Airbnb is pushing the upper limits of what it can grow into with its core platform.
Yeah, I think that's right. And this gets to the valuation point. Let's talk a little bit about that. In the last year, fiscal 2022, $1.9 billion in net income. Free cash flow is actually $3.4 billion. So you're starting to see free cash flow exceed net income. That's really notable. But the market cap, as we're recording, $86 billion. So price to earnings multiple is over 40, somewhere around 45. Price to free cash flow, you're looking at about 30. That's really expensive. And I think this is one of these companies where I have a few shares, a very small position that I opened up when they IPO'd. And I would love to own more of this company. I love this business, but I want to get in at a price that is a no-brainer to me. Something like 15 times earnings or 10 times earnings. And these opportunities pop up every once in a while. There was a time within the last decade that you could have gotten Microsoft for 10 times earnings or Apple for 10 times earnings. This is not an unreasonable demand for a very niche business. And that's what I keep going back to, is that I love the way they're operating the business, but it is not going to be Google. It's going to be a niche business in the travel and hospitality market. And I don't want to pay too much for that. And that's what I really struggle with, is the stock's reacting really strongly to earnings. I think they were great earnings. I think the trends are really good. I still think it's too expensive to jump into. What are your thoughts though, John?
Yeah, I mean, 40, let's call it 40x earnings. That is more than double the average of the S&P 500. So when you think about that, essentially what the market is saying is we believe that this company is going to be twice as good as average when it comes to growth. And we're saying twice as good as the average growth. That's perhaps a little bit ambitious. So yeah, I think that it is fair to say that Airbnb is an expensive stock. And I would agree with you full-heartedly that, man, it would be awesome to own this at an average valuation. Mm-hmm. I mean, forget below average. I'd love that too. But even at an average valuation, I think that you say, this is a better than average company trading at an average valuation. I'll take that. But it is tough. I think this is a company that it's going to be very hard to lose money over a long period of time. But is it going to generate market-beating returns? That's always been my question, still my question today. And perhaps you do just watch and wait for a better entry point.
Yeah, I totally agree with that. Well, we'd love to hear what your thoughts are on Airbnb in the comment section below. Are you more bullish on the stock than we are? I think, I just love a better price. And I think that's generally what Jon is saying as well. Follow Riiv Investing here on YouTube and follow Jon's channel. I'll put a link in the show notes, but Working Capital JQ is where you can find his content on YouTube. It's really great stuff. Thank you for watching, and we'll see you here next time.